Welcome to the Closing Beat, everybody. Happy Tuesday to you. How you doing out there? We are financial advisors here at Jazz Wealth. Appreciate you guys following along, and happy Halloween to you. Yeah, it's Halloween. That's right. 1 second. Okay, that's better. Welcome to the Closing Beat, everybody. Happy Halloween to you. I hope you're having a good day. I'm Beetlejuice, baby. That's what I am. I'm Beetlejuice up in here. Getting ready for the holiday night here, so hope you guys are looking forward to a fun night of candy and spooktacury. Candy's my favorite there. While other advisors are playing checkers, we are playing chess. I've got to tell you, we are Thursday for our Wine and Wealth. I will have washed this off and look much better, but we are going to be doing a special Wine and Wealth with a very good friend of mine who I've been tracking down for years, and is going to cover, he's an insurance specialist, knows everything about every type of insurance. So if you've ever wanted to ask someone a question that knows everything about insurance and does this, but you don't want to be sold something, you want to know the real skinny on everything, we're going to bring him in. His name is Chris, and so if you're one of our clients, this will be a Wine and Wealth not to miss. It will be archived and recorded, but we have got some great questions already from clients out there, so we'll be going through them. And Chris is sort of a no-nonsense kind of guy. He's going to just speak freely. We're going to let him just go and share the real insights there. So I hope you'll be ready for that. I'll send out an email to everybody as well to let you know, because I'm really excited about this one. He'll be here in the studio with us. And like I said, lots of great questions there. So I'll remind you of that tomorrow as well. As far as the stock market goes, good news, right? I don't know how serious you're going to take me today, but good news. We have 2 days in a row off a correction bottom. We have not seen 2 days in a row of gains in 3 weeks, just over 3 weeks, actually. So kind of cool, right? Well, kind of cool what's going on there. Cody, you want to share the Guess the Dow leaderboard before we get going?
We definitely got it. We got Daryl, Ricardo, Tanwi, and Cade. I don't know how to pronounce that fourth one. That's a cool name. But that's your leaderboard for today. jazzwealth.com/guess the Dow for your chance to win $100.
By the way, you're looking good over there, Pumpkin.
Not as good as you. I thought I looked good, and then you came in, and I was like, oh.
Really? I think it makes me look fat.
I agree.
Yeah.
No, just kidding.
All right, well, feel free to play jazzwealth.com/happy Tuesday. Back to the markets here real quick. 2 days in a row, off a correction bottom. That's not a bad start, right? We talked about this before. What did I do? Oh, I got to press the thing again. Okay, yeah. I don't know how to do that without changing it. There we go. And there's the science of how we did it. So back to the markets here. I think it's pretty cool what we have here. Maybe, I don't know, maybe somebody watched the show and they kind of did that there, saw what the market tends to do. It tends to outperform itself after having a correction there. We talked about this yesterday on the show. No need to go back to it today. I'd like to add to that, though, if I may. One extra thing to point out here. Remember a while back I shared with you the number of people committed to being short in the market was hitting a new low. And the market's just selling and selling and selling and selling, right? Well, that has since changed. Now, the number of people committed to being short in the stock market is net positive. So it's not that there's not any shorts out there. The number's net positive, which means there are more people betting on the market to bounce from here, actually betting, not just surveyed or, it's not a poll that you see on TV. They're actually betting on a net long position for the overall stock market to the tune of just about 0.5% there. So really cool. Obviously, that's nice to see as well. If we go through the rest of the markets here, the NASDAQ also bouncing off of its lows just a little bit. It is still the strongest by far of all the major indices out there. The Dow, I'm just going to say, I don't know. I'm going to keep my stance on that one. I really have no idea. The Russell. I made the argument that it was maybe beelining for that 20% pullback, and still very much could be true. I do want to point out that when we use the Russell, if you're a fundamentalist, you tend to look at price to book. More particularly, it's more for financials and stuff. But when you look at that, price to book on the Russell, if you want to get fancy for a minute, 1.7, just a touch over 1.7, which is in the bottom 20% of all known instances, meaning since it started. Since the day the Russell came out there, we're in the bottom 20% in terms of valuation. So the Russell would be considered extremely discounted at the moment, not just price-wise, but from a valuation standpoint. So I thought that was really, really cool there, something that you might find, attractive if you're looking at playing the small caps, which is the worst sector, hands down, or the worst index, hands down. It's almost down 20%, so, something to keep in mind. Very volatile there. If we look over at bonds, so the stock market is starting to believe, little by little, that the bond market maybe has bottomed, right? Just a little bit, maybe. Well, we find that over the last week and a half, we're trading at these sort of sloppily, jello on a plate, whatever you want to call it, puppies in a room, off of this low here. And we've had these moments where the bond market during the day, the yield, you'll find it falling. Right? We bumped our head against that 5%, and now the 10-year anyway is starting to kind of fall down a little bit. Well, the stock market's looking at that and going, okay, cool. Is that a peak? Do we have kind of that peak in bonds, right? A little soon to tell. It's a little tough one there. But with the Fed meeting coming up tomorrow, and a lot of them, their comments being on the side of, we've done enough for the moment. Let's sit back and wait. You expect to see a little bit more of that coming up tomorrow. Speaking of the Fed meeting, well, let me go back over here real quick. That was bonds. Let me hit on oil real quick. So oil is continuing to be a really good survey of the war expectations escalating or not escalating, and in particularly including Iran. Israel, that war on its own, that sort of fight, while devastating, I'm not discounting it or anything, is not really impactful to the oil market. It's not really going to do anything, right? Sad to see, but it's not going to make oil prices do anything. Well, if we start including Iran into this here, then that becomes a whole different story, right? Much more powerful oil producer. And so right now, the oil market's going, okay, if we're moving lower, we have no fear of Iran escalating this war or being a part of it or somehow drawing other people in. And so it's really been a kind of a good, minute by minute survey of seeing how that's going there. Just wanted to point that one out to you as well. Now, tomorrow we have the Fed with their announcement. It's Wednesday. Yeah, Wednesday. So I wanted to point out for you here that the probabilities have actually increased for a cut. And I told you yesterday, this is kind of fascinating to me that there's 0 chance of a rate hike. Okay, so we don't have to guess that or whatever. But we now have a 2.9% probability. Yesterday was 1.8. So we now have a 2.9% probability of some cut. I don't think you see that. That's obviously a long shot. 2.9% of anything is a long shot. But nonetheless, people are starting to believe, okay, we've done enough. That shift is starting to happen ever so slightly there. Now, it is tomorrow will be the 47th announcement by Mr. Jerome Powell, okay? Now, we know the current probabilities here. I want to tell you what the stock market tends to do. Now, I'm not, for once in a while here, I'm not going to use our data. I found some other data here for you. The S&P's average gain under Jerome Powell is 0.1%. Now, we know that. I've shared that pretty much every Fed meeting we talk about this. 0.1%. Okay. That ranks as the worst, right, out of all the speakers there. I'll show you that in a second. Leading up to the Fed announcement, the day of, right, because we start, markets open 9:30 Eastern. We go to 2 p.m., the rate decision comes out, then they have the conference call, okay? So leading up to that, the stock market performance is actually puts him in second place for the best performance. It's not a lot, but still, So what does that tell you? Just knowing those two stats, you know that the stock market tends to behave favorably in the morning, going into lunchtime. Coming out of lunchtime, when we have the Fed meeting, there tends to be a pullback there, at least when Jerome Powell is speaking. So if we look at the Fed performance monitor, where we track the S&P performance based on Fed member here. So we take a look at this. This is what I'm talking about. We have in red, so it's real obvious here, the performance of Mr. Jerome Powell. So we start off with a slight gap higher, and we tend to hold on to that performance with a slight, ever so slight rally into the day. Well, the Fed meeting starts, that's when in the afternoon we tend to see the sell-off, right? All right. Compare that to the other Fed speakers. Janet Yellen tended to start with a slight gap up and then a little bit of unsure, right? I don't know. Fed meeting comes out. She tended to have a favorable post-Fed announcement outcome that last hour and a half of the day. The best was Ben Bernanke. love him or hate him, he enjoyed the gains throughout the day and then a boost at the end of the day. All of that to basically just say, if we know where the stock market is at here in an oversold bounce attempt, if that continues into tomorrow morning and we have a slight gap higher, earnings of some comes out and we're slightly higher, don't expect us to race off to the races, right? Don't expect that to just take off, because it's normal for Fed day, have a little gap up and then let's wait and see. Let's just see what's going on here. And then as we get into the Fed announcement, we start to see that little bit of a sell-off there. So I just want to point that out. We'll see what tomorrow has in store, and of course, we'll be here to talk about it. Let's talk about some notable earnings here today, because there's a ton of them, man. Like, I'd be here all day going through all of these. I read through as many as I could, and I said, you know what, I got to put this makeup on and, do my thing. So let's talk about some of the interesting ones. We're going to go there, right? Anheuser. The old Bud Light people there. What was interesting to me, love them or hate them, is that they're getting a grip on the chaos that they've kind of been through lately. The stock was higher today because we find that even though sales are still suffering and declining due to the thing with the person, the man, girl, what we end up finding is they're figuring out how to tighten up their margins and, in fact, get their margins to go higher. So that's just me saying, like, they're figuring out, they're working through it, and that in turn turns out to a slight little bit of profit that was more than expected for the company, right? So hopefully, they can keep figuring it out. Caterpillar officially parabolic here. Notice we have the biggest down day with the most amount of volume there. If you look at Caterpillar, some of the language these people use, I love that I can just tell you, this is what they mean, right? So they beat on earnings. Everything's fine there. Here's the trouble. They say, well, we beat because we see favorable price realization and higher sales volume. Okay, that's not so hard to decode, right? Higher prices, meaning they jacked up their prices, and the volume was able to sustain those prices. So they didn't lose a lot of business. However, you know how Netflix likes to look at subscribers, and we like to look at revenue per available seat mile in airlines. We'll get to JetBlue in a second. For Caterpillar, we don't have subscribers. Well, we have a backlog. It takes time to build this massive piece of equipment, right? So they look at the backlog, and unfortunately, the backlog is kind of the favored metric out here. The backlog is down. New orders are getting weaker for Caterpillar, and that's going to translate into weakness in the stock price as people try to figure out a fair value. JetBlue. Okay, so here's one. So JetBlue, they said, we see domestic capacity outpacing domestic demand. All right, that's not so hard to decode either, right? What they're saying is we have more seats than people that want to sit in those seats. As an investor in the company, at least in the short term, you go, so less people in the seats, that means less money. Oh, whoa. So you're selling less tickets, right? That's all they're saying. That was the focus. Like, all the other stuff almost didn't matter. But when they tell you we have less butts in the seat, but we have plenty of seats. And then they kind of went off. If you listen to their conference call, they went off and trying to blame, air traffic control, having some troubles there. And weather. They always blame weather. So that's what you have with them. Also, I would say, kind of parabolic. And lastly, we'll go with Pfizer here. The notable thing here that caught my attention, they missed on earnings and whatever, but they wrote off $5.6 billion in, product. That product happened to be correlated to the use for COVID or pre-COVID or after COVID, right? So the shots, the antiviral and all that stuff. $5.6 billion write-off there, which I'm going to assume a lot of people saw coming or something there, because that's pretty nasty, and that's what's going on. That's basically what I want to share with you today. We have earnings tomorrow. We're going to stick with healthcare. So if you're in the healthcare sector or want to be, you got CVS, GlaxoSmithKline, Humana, other names outside of that: Norwegian Cruise Lines, Wayfair, Airbnb. Always kind of a fascinating one to see how people are traveling, see if you're still spending your money. C.H. Robinson getting into transports a little bit there. Back to healthcare, you got McKesson. Mondelez going to report, PayPal, QCOM, it just is forever. Also, Fed rate announcement there, so that'll be your midday excitement. And throughout the day, we will likely see some volatility in the car stocks there. We have total vehicle sales coming out, and they're not like it's not a specific time. They just sort of come out. Yeah, I don't know. Beetlejuice. I love it. Just stopped a bar fighting, man. That's true. Anyways, I'll take your questions if you have any here. Otherwise, I don't know why it's hot today, man. It's a little toasty in here. All right, let's see what we got to go. The dollar, I believe the dollar broke out. Did it hold its breakout here today? No. Okay, never mind. Budweiser, yeah, I know it's a fun one to, it's a hot topic, right? I just thought it was, from a logistical standpoint, if you would ever consider investing in that company, if you haven't already banned them for life, it's nice to see that they're adjusting. Any company, JetBlue really should probably think about a few things too, right? So when you look at JetBlue, Caterpillar, Bud Light, some of them have political stigma, some don't. But just to see that they recognize it, they're adjusting, and they're trying to turn the ship, a big ship, pretty quick there. I give them a little credit for that. You know what I mean? At least to the people that are not in the marketing team, because the marketing team got it a little bit wrong there. Don't buy the Russell 2000. Buy the S&P 600. Much better quality stocks. And also the better longer-term performer. We've done classes on that in the past, that when you compare the S&P 600 to the other indices, in particular the Russell 2000, you will find that the long-term performance is better. So if that's your goal, ultimate, you're not worried about a little more volatility, but you want that growth, you'll be just fine. You guys with your thing. So have you seen that cold front? Like us in Florida, we're all looking up, but what happened? Beautiful cold front. Y'all are going to get nice and cold and stuff. And then it stops like on our border and said, nah, Florida's out, man. It's Gomez Adams. Yeah. I forgot the hair stuff. You know what I mean? The hair could have been better. Time for Roth conversions. It definitely needs to be a conversation you are having. Yeah, especially the timing of it, right? We're almost to the end of the year. You got your 10% pullback. You hoping for what? You think it took, 73 days to get 10%? We don't have that. It's not available for you to hope for another 10% at that pace anyways. Yeah. I don't like that. Yeah, so for me, the oil, looking at something like that, I wouldn't mess with it personally, at least for starting any meaningful position here. It's difficult, I just can't think of any good reason to say, this is my shot. I've been waiting, yay, Yeah. Still think oil does go higher, if that's your long-term plan. But yeah, not at this. I wouldn't say you need to wake up tomorrow and rush to the computer to invest in some oil. Of course, I can't tell you what to do here so much, but if you're a client, you want to ask on the Wine and Wealth, happy to talk about that. Again, a little bit of trouble saying stuff like that. You're going to send us some of your snow. It'd be nice. You have to put it in some kind of cooler or something. This ain't going to last long down here. All right, there we go. I've covered everything for you there. Embarrassed myself, dressed up and all that stuff. So that ought to be worth a like, right? Or a subscribe. Come join us at Jazz. Roll over an old 401k, Roth IRA. Make it in time for our class on Thursday. It'll be in the portal, talking insurance. Questions from an insurance pro without the pro trying to sell you, right? Because I won't let him do it. But no, he's a good guy. You'll really enjoy that one there. So we'll do that. I wish you guys a good, happy, and safe Halloween. Remember, if you're trying to keep your dough straight, you don't buy the Halloween tonight, right? You buy it tomorrow. That's when you go pig out on your candy. So enjoy that, and we'll see you tomorrow. Adios.